Welcome to SectorExchange.com. I'm Jim Ferris, founder and editor. As we've been going through this Learn How-To series, what we're going to do the last part of this is put it all together. We're going to talk about how you actually can use the website. And this is probably the simplest video that will wrap it all together from the standpoint of what it is, why it is, and how to use it. And as we talked about in the overview, I think that the Sector Exchange gives you as the investor an opportunity really to just take advantage and peek inside, if you will, what we've been doing for professionally for almost 30 years. And I think that's the key. It's the key that you're getting research that you can use on a day-to-day basis. And what I want to do is go through how do you use that? How can you, as an investor / trader, capitalize on Sector Exchange? And I think the simplest part to do that is that you start with Jim's notes. And you can read them every day. I recommend it, but some people just say, I'm not that interested in what you have to say, and that's okay. But I write the notes every morning. They're basically an overview of what's going on. You can go back and listen to the video about what they are, how they are, and why they are. But there's a lot of data in here. There's a lot of information of how to use the website to capitalize on the things that are published there. A part of that is that Jim's notes is the intro really to Sector Watch. So if you read the notes and then flip to Sector Watch in the morning, you can actually go down to the notes and read sector by sector. Sometimes there's more than others. Depends on what's happening in the market at any given time. We're going to look at the long side of the market, the short side of the market, and the consolidation of the market. We're going to look at the 6 asset classes, which includes the global markets. So you got U.S. markets, you got the international markets, you have currency, you have commodities, you have real estate. All of those are key components of the market. And with the introduction of ETFs, it's allow you as an individual investor, it's made a simple way really to capture those moving components of the market on a day-to-day basis. So we filter, scan, and watch that. We do a lot of scanning in the mornings. I start early, usually around 4 or 5 o'clock in the morning. We start that process generally by 6:30, 7 o'clock. You'll have the Sector Watch notes are posted, and they will be on here what we're looking at throughout this coming day, but they're updated every day. It doesn't mean that every day there's different sectors. It just means that we're updating what's happening. And the reason they're here, they're on the move, they're moving up, they're moving down, they're moving sideways, they're doing something. And once they get close enough and are defined enough, they go to the watch list. And that you find on the rotator model or the income model. So both of those have a watch list. So when we do the scans, we're going to look for income positions. We'll look for growth positions. And remember, Sector Exchange rotator model is focused on growth, 1% per month without losing money. That's the way we're going to manage the portfolio. And a lot of people will say it's conservative by nature, and I guess that is. But what I look at is I want to make the most I can when the markets are up. In other words, in 2009, if the markets are up 35%, then by all means, we want to make 35%. But in 2011, when the market is zero, we want to make money, which we did. And I think that's the key, is that you make money when the markets are, if you make money when the markets are the most volatile or negative, then that I think you're really a quality trader. If you make money when the market's up, a monkey can do that. When the markets are trending higher, all you have to do is be in it. But when the markets become volatile, choppy, and moving in different directions, that's where you've got to protect gains. You've got to manage risk. You got to do all those things. And that's what I think that we do extremely well, is we are great risk managers and the downside of portfolios. And we've had to learn that really since 2000, when the market started to correct significantly in the dot-com bubble burst. That really impacted markets across the board. 2007 and 8 really impacted markets. And, 2011 was really just a very tough trading year. Once you got past March or April of that year, you really had to trade and manage the volatility of the markets and protect principal in order to end in a positive position. And that, I think, is what separates quality traders, portfolio managers, from just, buy and hold type strategies, which I don't buy into by any stretch of the imagination. But so when you look at this, what comes out on the sector watch actually gets built into the watch list. Right here, you can see Bank of America's on the watch list. Sometimes it's going to have 20, sometimes it'll have 5, sometimes it'll have 1, sometimes there won't be any. If the markets are too volatile, why would we want to be in it? We'd rather be 100% in cash and out of it. And you say, well, why would you only have 1 at this point? The market, the portfolio is 52% invested at this point. It's half in cash. I still don't like the market, is what the bottom line is I'm trading what I think is an upside opportunity. And am I underperforming the market at this point? Absolutely. But am I outperforming what our objective is? Absolutely. We trade based on the objective, not necessarily the market. I don't care what the benchmark is doing. I care more or less what's really happening relative to the risk and the performance of the portfolio. And I know by our track record over the years that we've outperformed in every way, shape possible based on the fact that we manage risk. So I'll get off of that soapbox, but I think that's a very, very, very important point is don't get hung up in performance. Get focused on risk portfolio management, and you will have performance. And I think performance is important, but I also believe that it's just as important to manage the risk of a portfolio so that you can experience the performance and keep it. Well, a lot of people give it back, and I think that's really a tragedy that so many people do that. So to summarize quickly here is that you go to the notes, you can read them every morning. You go to the sector watch, you can read the notes there. You go to the watch list, you can see what's on it. And then you go to the portfolio. At the end of the day, we recommend that you log into the portfolio, look at what's there, and you can see whether or not the stops have been adjusted, the targets, have we hit the targets, are we recommending something with the actual portfolio. That's all done at the close of business day, and you get it all updated relative to the next trading day. We do recommend things almost every night when the market's moving. When the market's sideways, it's going to be less activity, just for the simplicity that don't force trades. It amazes me that people think they have to trade every minute of every day. I don't have to do that. I have to focus on what works relative to the objective, and I think that really is the key. So that's how it's really built, is that you're doing that. And then the last thing that you have on the watch list every day is that a part of that portfolio update, watch list update, is a video. And just like these are videos, these videos are produced. You can see them right here. You can click on the play button, and it will go through what is on the watch list, what's on the playlist. So in other words, what are we watching today? What are we playing today? How do we manage the risk? How do we manage the portfolio on an ongoing basis? Because that really is what's important overall. And then the last thing is the weekly update. So we have what we call a Sector Watch weekly update. The video is produced every Friday. Right here is the bottom one. It will the most current Friday video will sit there until the next one is recorded. You can review it. You can go back in the middle of the week and look at what were we talking about coming into the trading week, and it gives you an overview. And on Friday night or Saturday, Sunday, we will update the text of Sectors on the Moves. This page gets completely overhauled over the weekend. We do all of our scans. Everything comes out fresh over the weekend, generally up no later than Sunday night by 6 o'clock. So you always have a fresh list that's there relative to what we're looking at. And with that, the watch list on both models are updated no later than 6 o'clock on Sunday night to let you know going into the week, what are we looking to add to the portfolios? What are we suggesting you take out of the portfolios? But you get everything ready for the trading day. And that really is, I think, a helpful tool for a lot of people. What if you're busy and you say, I can't do this every day? That's why we do the weekly format. The weekly format allows you who are still working full-time to come in over the weekend at your leisure, look at everything, look at how to build it. And we recommend using buy stops, sell stops, and managing the limits on them if you need to, relative to the price you want in or out of at. And so you can still manage these portfolios on a weekly basis. They're not so time sensitive that you got to be looking at it every day. It means that you may miss a opportunity intra-week, and if on Wednesday we see XYZ stock moving up and we add it to the watch list and you're only looking at it over the weekend, you'll miss that trade. That's okay. I mean, you don't have to have every one. You don't have to take every play. Manage it based on what you're trying to do. It's good research. It's valuable to you as a trader and investor, whether you're looking long-term, short-term, or intermediate. And, you can even use a lot of this data to manage a 401k plan just by tracking the sectors alone. So the opportunity is there for you as an investor to glean a lot from the site. You can put it all together very easily, as you see. We constantly are updating the educational component of this. It allows you to link out to our website, Money Strategies by Jim Farish, which will have videos, articles, archived information. So you have full access to that data by being a subscriber to SectorExchange.com. So we'll leave it there. I hope that you'll take advantage of this. At least try the trial. There's no harm in trying it for 90 days for $249. I think it's cheap by any stretch of the imagination. The annual subscription is $995, and you can right now you can get your choice of a video series that goes with the trial subscription. Right now we're using The Secrets of Sector Rotation, which we just recorded recently, and you can have access to all of that for $249 for 90 days. It's a great value from my view, in the fact that people pay thousands of dollars to investment advisors for the information that we put out on this website every day. And being an investment advisor, I know what we charge for the same information on an individual client basis, and it's not $249 for 90 days of research. So take advantage of it. Use it. If you have questions about anything that you've listened to on the website, again, the 800 number is 1-800-369-5759. You can call that number. We are generally in the office from 8:30 until 5:30 East Coast time. You can email us, info at sectorexchange.com. 24 hours a day. Not going to be reading it 24 hours a day, but you can welcome to send it. Many of you do, but that's right under Contact Us, and you can use that as well. So with that, have a great day. A great opportunity in the market awaits everybody. So we wish you the best of luck with trading.